Little change in USDA numbers on this February, but the market took it negatively. We'll talk about all of it in just a moment. First off, welcome back to Your World in Agriculture for this February 11th, 2025. Welcome to Imaging Ingredients, our first sponsor. Prices on Tuesday traded negatively. Corn and soybeans turned negative after the USDA report was released at 11 a.m. Central Time. Wheat traded up 6 cents. On the February report, as we take a look at the charts, the real big story here is there was very little change. Take a look at the U.S. ending stocks first off. As you see, corn at 1.54 billion bushels, left unchanged from January. Soybeans at 380 million bushels, left unchanged. The wheat number at the bottom is HRW at 382, slightly below last month's, but the overall wheat U.S. ending stocks number of 794 today at the low end of the trade expectations and also lower than last month's number. Again, soybean oil on the chart you're seeing and soybean meal left unchanged from the January estimates. This did not really produce much reaction from the trade to begin with, but as the hour went on, the markets for corn and soybeans fell negatively, and wheat remained positive, up 6 cents after the report. Now, to the South America production numbers. Again, the trade expected to see the USDA lower the soybeans estimate for Brazil, but we take a look here first off for Argentina. The corn number was dropped from January, down 2%. For soybeans in Argentina, this number, of course, is the largest change in really the whole report today, down 5.8% at 49 million metric tons. So Argentina, of course, has had some dry weather in January. February's weather for Argentina soybeans and corn has turned wet, has turned positive for that crop. So we'll see how the trade reacts to that. As far as Brazil, the corn number down slightly in February from January. Meanwhile, soybeans at 169 million metric tons. It was left unchanged. When you total all of these numbers up, you still get a pretty big crop out of South America at 228 million metric tons for their soybeans for Argentina and Brazil. So again, the market is really taking it as a negative outlook because it's still a pretty big number. Now, the other estimate that came out today was world ending stocks, and we want to run through these very quickly. For February's report, the corn world ending stocks at 290.31 million metric tons. That's below trade expectations. It was also below January. So overall, friendly number for the corn market. Soybeans came in at 124.3 million metric tons. That's below the trade estimates and also below January at 128.3. So again, the soybean market may see this as overall friendly in the long term. And the wheat world ending stock at 257.5 million metric tons. That's down slightly from January at 258 and at the low end of trade expectations. So really what you're seeing here, we have plenty of everything, corn, soybeans, and wheat around the world, but the numbers as far as world ending stocks did come down slightly. A few corn notes that the USDA report did mention. The projected season average farm price in the U.S. up 10 cents at $4.35 per bushel from last month. Again, the world corn production for 24-25 is forecast to be 1.8 million lower than the million tons lower to 1.5 billion bushels. This month's foreign coarse grain outlook for reduced production, trade, and ending stocks. Major global trade changes for 24-25 include smaller corn exports coming out of Brazil, Ukraine, and South Africa. Corn imports are cut for China, but raised for Vietnam and Chile. Meanwhile, for soybeans, a few notes here to mention. The U.S. 24-25 soybean season average price for soybeans projected at $10.10 per bushel. That's down 10 cents from last month. Soybean meal and soybean oil prices are unchanged. at $310 per short ton and 43 cents per pound, respectively. World soybean supply and use forecasts include lower production, higher use, and lower ending stocks. Also, global soybean crush is raised on higher crush coming out of Brazil. The increase is driven by favorable crush margins, strong biofuel demand, and the pace of soybean meal exports to date. And that would be negative overall for the soybean meal market. For 2025, cattle prices are raised for all 4 quarters on recent prices and continued strong beef demand. Hog prices are raised for the first quarter on recent prices. Meanwhile, for 2025, the USDA's report this month, the beef production forecast is raised from last month. Meanwhile, milk production is reduced due to lower than expected cow inventories. Higher cattle placements are expected for the year, and slaughter is raised, also primarily in the second half of the year. Dressed weights are also raised. Pork production is raised as higher weights throughout the year more than offset the slower rate of slaughter expected in the first quarter. Also, broiler production is unchanged. Reminder, cattle, hog, and poultry producers, listen up. If your livestock have scours, Imogene Ingredients sell a product called Pharmatan, and that stabilizes the digestive process. It's a granular that you can place in your feed. It can save your animal, increase immunity levels, and improve general health. Decrease your scour cases today on your farm by contacting Imogene Ingredients at 515-745-1639. Visit imogeneingredients.com. And the charts and the graphs that you have seen on today's report come right from Arrow Advisory. Arrow Advisory can turn your data and process into insights and efficiency. Want to know more? Check the description on this video below. Be sure to subscribe and like Your World in Agriculture for more farm content. I'm Mike McGinnis.